But the 200-day moving average is a critical level. We are a little bit below that right now. And it's important that we get above it as quickly as possible. If we stay below it, it could be a bad sign. Now, have we dipped below it before? Yes. All the times we dip below the 200-day moving average, you can see that big dip back in late 2018. So sometimes a lot of people look for signal in the past, and I do too over history, but Bitcoin is still very, very new. A C19 dip in March 2020, and of course the dip we had in the bear. But here we are now. The question is, will it dip again? And I think there's a lot of people talk about, oh, well, coming up to the halving, there's a dip because it did it last time around. But last time around was driven by C19. I'm not going to mention the C word, but that's what happened in March. And that is not reflective of how Bitcoin behaves. And in the current phase of the cycle, there is a high chance of remaining above the mezzanine level, which is magically at $21,750. So we came within $3,000 of that mezzanine level. But that, ladies and gentlemen, is the floor. And that, ladies and gentlemen, would not have been breached last time around if it wasn't for the C19 Black Swan event that happened. We would have remained above the mezzanine level. So everybody, for those of you who listen to Twitter and everything else, and they're saying we're going to 11,000, we're going to 12,000, we're going way back below 15,000. Remember, that would be extremely unlikely based on history. But Black Swan hits, everything's possible. Now, let's look at what the big boys and girls are doing with their bags during this downturn. This is what I look at, because I don't want to follow what Twitter does, but I want to look at what the big money's doing.